Thank you guys for clicking on this week's video. Today we're going to go over why a stock cap matters. The reason a stock cap matters, it kind of tells you where the company is at in its current position. The smaller cap it is, the smaller a company it is. It's a great way to tell you how big a company is and what they're valuing themselves at. For example, you have a company with 20 million shares selling at $100 a share. They would have a market cap of $2 billion, giving them that assessment saying they're worth $2 billion. With this information in mind, you can go through and look at their balance sheets, their income statements, their cash flow statements, etc., and determine if they really are worth what they're saying they're worth. And with a smaller market cap, you know that that company has more room to grow. Since it's a smaller company, it can grow a lot bigger. And if it's a bigger company, it doesn't have much room for growth. It also helps with risk. If it's a smaller company, you do know there's a lot more risk involved. They don't have a solid foundation yet to build upon, whether they're trying to expand or not. And a bigger company has a solid foundation, and since they're so big, it's harder for them to fail. However, don't take this as an absolute truth, because you see all the time that big companies do fail and small companies can succeed. So thank you guys for watching. I hope you liked the video. Remember to like, comment, and subscribe for more future content.